Well, hi, everybody, and welcome to the Buffett and Beyond Saturday Market Recap Letter. And this is Saturday, June 10th, 2023. These methodologies are based on the book Buffett and Beyond, second edition. And remember, folks, if you want to live on this beautiful beach at sunrise like Jimmy Buffett, then you've got to learn how to invest even better than Warren Buffett. And this week, well, the market did little this week except officially enter into a new bull market after rising 20% from its bear market lows. Meanwhile, we wait for the Fed's action this coming week because this market is overbought and we're looking at a few weaknesses in here. So let's take a look. Our weekly stock analysis video, well, we look at both Budweiser and Target after they seem to be concentrating more on political statements rather than working on selling better products to its customers. So they've been a little bit hurting here, folks, but we're going to take a look at them. Our ETF video, well, the retail ETF has not done much this year to date at all. However, the top 5 stocks in this ETF are up almost 5% more than the ETF itself over the past 5 years, and almost 500% more than the S&P itself over the past 5 years. Now, is it time to add to our positions in these stocks since they are out of favor right now? We think so, and that's what we've been doing this week. All right, let's look at the market. This is the S&P 500, and we're looking at the volatility bands. And last week, we rose above this top volatility band. And when that happens, what we do is expect a pullback and then a run for that previous high once again, which we just surpassed by a little bit. And we have the question now, does this fall back to its 20-day moving average? Or does it keep pushing this band up? Really, really tough question. Down here, our intermediate term indicator is still pointing up, but boy, oh boy, look how high above this zero line this indicator is. It looks strong, but maybe a little bit too strong. But anyway, we'll take a look because there's a lot of stocks in the S&P 500 that have not participated in this latest rally. And when we look at the QQQs, well, back in here, now remember the QQQs are the NASDAQ 100 stocks minus any financial stocks. It went above its top band and pulled back a little bit, went back up to test it again, and has pulled back again, and now is just kind of sitting here waiting for some impetus to get it to move one way or the other. The thing that bothers us a little bit is this indicator down here seems to be turning down, or at least turning flat in here. So that's what we're looking at, folks. It doesn't mean the market's going to go down because look back in here when it did that, when the blue line came down to the red line and just ran parallel with it for a while, and they call that braiding, when the two indicators, a faster indicator and a slower indicator, just move side by side. And then the market corrected a little bit, and then it took off to newer highs. Nice move by the QQQs, which have led the market rally, because where do the technical stocks and where do the semiconductor stocks reside? Mostly in the QQQs. So it's been a very, very good indicator for us. And when we look at the S&P 500 again, in here we include the 20-day moving average. And last week we were talking about reverting to the mean, and you can see how often the market gets ahead of itself in the 20-day and then comes back to it. Gets ahead of itself in the 20-day, but it got ahead of itself in the 20-day for quite a while, so it can do that. Then comes back to it. So we're looking at a possible stopping point of resistance, and we're looking at this indicator here. This is a little tiny sell signal where the market goes to a higher high, and yet these points are at a lower high. Very, very short-term signal. Meanwhile, down here, the intermediate term signal is still looking strong. However, we worry, back up here, we worry about a little movement of reversion to the mean. So we're very, very cautious in here. But then again, when aren't we cautious about the market? So when we go to portfolio protection, those of you, who still have your put protection on, we have 3 puts, June, July, and August 18th. And these are the SPY 410 puts for about $135,000 portfolio. Now, some people like protection all the time. Other folks get out of this protection while we have our intermediate term indicator right here still pointing up. But maybe this week we might start adding back to our put positions, and rather than going just to the June 16th, we'll probably go out to the September, roll this one over into the September put. But we'll see over the first couple of days of this coming week, and we will send out the portfolio protection letter if we do something to all those who subscribe or have a free 2-week trial to our newsletter. So this will come out during this week. If it doesn't come out, that means we're not doing anything. But don't forget, by next week, we have to do something about these June 16th puts, if you still have them. So anyway, portfolio protection is there, or it's on its way, depending on how you handle your own portfolios. And we alert professional money managers of this situation, and they will be getting their letters also on what we will do with the June 16th put that expires next Friday. So folks, we had a pretty good week this week with the market 20% off its lows, or bear market lows, which is the definition of a bull market, but it seems to be stuck because of that Fed meeting, and we will know at 2 o'clock on Wednesday whether the Fed will raise rates or keep rates steady for now. And at 2:30, Fed Chief Powell will speak and give us his thoughts on what the Fed sees in the inflation reports. So folks, you go out, you have a good weekend, forget about the market for a while, stay safe, enjoy it, because Monday will be here soon enough, and so will we. All right, folks, have a great weekend, stay well, and we'll see you in a few days.